Most beginners copy random strategies from the internet and then wonder why nothing works. But profitable traders don't copy strategies, they build them. And today I'm going to show you the exact step-by-step process professionals use to build a trading strategy that actually fits their personality, their risk tolerance, and their schedule. This is where everything you've learned so far finally comes together. Beginners think a strategy is a magical indicator setup, a secret pattern, something that works 100% of the time, something you find, not something you build. But the truth is, a strategy is nothing more than a set of rules that guide your decisions. A strategy is not supposed to predict the market. It's supposed to give you consistency. Professionals don't guess, they follow rules. Before you can build a strategy, you need to observe what the market actually does. Here's your first task. Spend 1 week watching charts on TradingView. No trading, just watching. Look for repeating behaviors like price bouncing off support, rejections at resistance, pullbacks during trends, volume spikes before breakouts, candlestick patterns forming at key levels. If something repeats, you found a potential edge. Strategies begin with patterns that keep showing up. Let's say you notice a pattern. Whenever price pulls back to support in an uptrend and forms a bullish engulfing candle, it often bounces. Great, that's a starting point. Now, turn it into a rule. Entry rule: buy when price is in an uptrend, pulls back to support, and prints a bullish engulfing candle confirmed by rising volume. Stop loss rule: place stop below support. Exit rule: take profits at 2 times your risk or at next resistance level. Congratulations, you just built the framework of a real trading strategy. Now, before risking real money, you need to answer one question. Does this strategy actually have an edge? To find out, you backtest it. Open TradingView, use the replay function. Go back in time and ask, would I enter here? Where is my stop? Where is my target? Did the trade work? Record the results, win or loss. Size of the win/loss, market conditions, time of day, pattern quality. After 20 to 50 trades, you'll know if the strategy is viable. Backtesting isn't about being perfect. It's about learning how price behaves. Your strategy's edge comes from 2 numbers: win rate, average reward to risk ratio. Here's an example. Win rate, 40%. Reward to risk, 2 to 1. That means out of 10 trades, 4 win plus 2 R each plus 8 R. 6 lose minus 1 R each minus 6 R total plus 2 R profit. Even with a low win rate, the strategy is profitable because the winners outweigh the losers. This is how professionals think. They don't obsess about being right. They obsess about having an edge. Once backtesting looks promising, you move to demo trading. This lets you practice execution, learn how to follow your rules, gain confidence, test discipline, refine your entry timing. Most beginners skip this step because they want to trade for real. But demo trading is where your rules turn into habits. When you finally go live, start with the smallest position sizes risk, no more than 1% per trade. Follow the same rules you tested. Focus on consistency, not profits. Your goal isn't to make money fast. Your goal is to prove you can trade without breaking your rules. If you can't follow your rules with $50 risk, you won't follow them with $500 risk. Trading success scales from discipline, not dollar amounts. Your strategy must fit your schedule, your emotional tolerance, your preferred time frames, your patience level, your risk tolerance. And for example, if you hate waiting, you won't succeed with a slow swing strategy. If you get anxious easily, you shouldn't trade 1-minute charts. If you can't watch charts during the day, you shouldn't day trade at all. There is no best strategy, only the best one for you. Now that you know how to build a strategy, you need the skill that protects it. Position sizing. Even the best strategy in the world will fail if your position sizes are random. In the next video, I'll show you the exact formula professionals use to decide how much to trade, down to the dollar, so you never blow up your account. Click the next video in the playlist, the position sizing formula that protects your entire account. This is where the math becomes your best friend.